The Nigerian stock market had a good running in the last quarter of 2017 as the market closed on a positive note almost on a daily basis.
Yeah. Now, though the Nigerian All Share Index is still below record highs set in 2008, a 43% rally in 2017 has helped to close the gap. Now, the index suffered mightily in 2015 and 2016 as low oil prices, militant attacks and currency troubles made investors weary.
But that wariness was eroded by rising oil prices, monetary policies put in place by the central bank that has made it a bit easier to do business in the country, and the economy that snapped out of recession in 2017. Now, the Nigerian stock market has been rated amongst the 5 best performing markets of 2017, alongside the US, Argentina, Turkey and Hong Kong.
Well, according to data released by the National Bureau of Statistics, capital inflows into the domestic economy recorded a notable improvement, expanding by 128% year-on-year. Portfolio investment accounted for the most inflows into the country, followed by other investments in the form of loans and foreign direct investment.
Many analysts are optimistic that the stock market would perform even better in this new year. A financial expert, Mukhtar Mohammed, now joins us to look at the gains made by the stock market last year. Good morning to you and Happy New Year.
Thank you.
Good morning.
Yeah, it was a very good performance for the Nigerian stock market last year, and even the world recognizes it.
Yeah. Well, that's good news for us. This is not the first time that the market is being recognized by the world. I think this for the past 7 years. Before the meltdown in 2008, we were at a point where the best performing market in the world. So it's good news. That shows that we are getting back to where we used to be in Africa as the first largest economy. It became the second largest economy, and I believe we are beginning to attract the type of portfolio investors that we want. The only challenge is that some of these portfolio investors are coming into Nigeria. They are not staying for the long time, and unfortunately, the Nigerians that are supposed to benefit from the stock market are not benefiting from it because some of them lack education, some of them lack even the liquidity to come into the market.
Now, when a stock market is said to be best performing or is performing, like the ratings of Nigeria, the commendation, after United States and Argentina, Nigeria was, I think, number 3rd in that rank, then others followed and so on. And it was commendation. But when you look at the people themselves, it is not a reflection. An average Nigerian on the street cannot say, yeah,
absolutely,
our stock market is booming and all of that. He can't feel the impact. So who are the people feeling the impact? How does it translate to economic prosperity or development?
Well, no meaningful development in any economy in the world that does not go through the stock market. Okay. The barometer of your economy, how good your economy is measured, is by what your performance in the stock market. And the stock market is not a short-time market. Like you said in your analysis, in your opening remark, 2015 to 2016, the market was in negative red. That is an opportunity time for most cruise investors, and most of the foreign investors took opportunity in the midst of crisis. That is when it's the best time to invest in the market. Now, why the average Nigerian is not benefiting from the market? 1 has to do with education. 2, again, has to do with low liquidity. Consumer liquidity was very low last year. For the past 2 years, the economy was going through serious recession. Government were not able to pay salary. It's a man that has eaten that we think of setting aside something to invest. Now, who are those benefiting? In Nigerians that are benefit. Nigerians that are benefit are actually the companies listed on the stock exchange, and then when you talk of individuals, then you talk about the pension fund administrators, then you talk about high net individuals that have been playing the market for a while. Those are the people that are really benefiting. For the average man to begin to benefit in the stock market, he needs to have an investment goal. He needs to have a target of how he wants to. Now, the challenge is that at 2008, almost 70 to 80% of Nigerian played the market because they saw it as a means of coming out of poverty. And immediately after the crash, some of them have never even looked at what is happening there any longer. I can tell you countless times, I've seen people come to talk to me about, I had this stock, 3 years ago, and I bought it, and the thing went down, and I said, how much did you buy it? I said, but this thing is up. And I said, no, I'm not sure. I said, look at it, it's up. So it's basically Nigerians lack financial intelligence, and sometimes financial intelligence is very expensive, and most of them are not ready to get it.
Now, it seems that we could still come here at the end of this year to talk about the same thing, that gains have been made if FDIs don't go up. And that is not what we are seeing right now. FPIs are going on portfolio investment, foreign portfolio investments, as against foreign direct investments. You
know, we said this the last time I was here. I said it, that what we are experiencing now is not hurry to the economy. It's just for portfolio investors. And portfolio investors are people that we call those with the hot money. So foreign direct investment is coming down. It was, again, as negative as 70% now. But the good thing is that before you begin to attract foreign direct investment, your portfolio investment has to go up. Okay. So it is when the portfolio investors are coming in, they begin to see opportunity for foreign direct investment to stay longer, either to build up companies or to begin to establish companies to play the market.
But it means they will spend more money for investment. They will spend, because this one is easy money for them. But when it comes to FDI, it means they have to come and be grounded.
You see, it all depends on the legislatures that we have in place. As it stands now, we don't have a fixed legislator when it comes to coming into our market and going out of our market. We need to give them incentives. Even the Nigerian stock market. That's
talking about policy.
Yeah, the Nigerian stock market is not deep enough. Most of the major players are not there. The telecom sector, none of them are listed in the Nigerian Stock Exchange. The oil major, none of them are listed. Even the government was talking about privatization of NNPC, bringing NNPC into the market to make it strictly run privately. It has not done that. So the depth of the Nigerian market is still shallow. So we need the government and the NSC and the Security and Exchange Commission need to work on that. And how to work on that has to be when you begin to give companies incentive, tax incentive to be listed in the market. Now, when companies are listed in the market, 2 ways we can apply. We can go through the Malaysia experience, whereby certain percentage of the civil service money was diverted into investing in some of these companies instead of them just taking up all the money. Now, Nigeria achieved that through the pension fund administrators. They are investing in the market, but there's a limit to how they can invest with. So that also is playing out. But the government can make legislation whereby, if you watch the big companies that are listed, the lack of the big companies that are listed in the market, you realize that at the time they were coming to the market, they made provision for their staff to buy some of their shares, to be part-time holders. That is the way to grow your economy. That's the way to grow wealth. When I become a part-time holder of a company, I become interested in making sure that that company makes money, because of
ownership mentality.
Ownership mentality. But as it stands now, Nigerians do not see the stock market as an avenue to grow wealth. They see the stock market as an avenue to come in and go out. So you cannot grow your wealth like that. So that's the challenge they have.
All right. Now, when the stock market is being set up, is it set up with the foreign investors in mind or Nigerian investors?
Look, the stock market is actually set up for Nigerian investors.
Okay.
But you know, the world is a global village. You cannot take away foreigners from playing your market. Ensure they add color to your market. And that
gives credibility.
Give credibility to your market. Now, what is the difference between the foreigners and the Nigerians? The foreigners seem to have better education on how the stock market works. So when the market is in crisis, they tend to come in and begin to mop up fundamentally good companies. At that time, Nigerians are running out of the market based on so much rumors that might not be true. Speculation. But the foreign investors have their own stock brokers, analysts that will now analyze each of these companies.
So they know how to take the risks.
They now take the risks and come in. But we don't have that in Nigeria. So that's why we have that challenge. But I feel strongly that Nigerians do not want to play the stock market after the 2008 experience. Some of them lost a lot of money through margin loan and other sources. So they are not ready to come to the market. But unfortunately, if you look at individual equity, they have even made more money than the 2017 to 2007, 2006 to 2008 in terms of capital appreciation. You know, some equity were selling as low as 3 naira. And today they are selling as high as 11 naira.
It's true, because the stock exchange in the country is the cheapest on the planet.
Yes, and again, you need to look at the environment. The environment is becoming conducive, so the foreign investors are beginning to look at our oil price.
Now that's the fear.
They are now beginning to look at it, and they say, look, the environment is conducive now for us to come in. And they are now looking at the export and import window that was created by the CBN. It's easier for them to repatriate their money back at as when due compared to what was happening before during the crisis when this administration came to power. And with Nigeria now not being removed from the molding index frontal market of emerging market also helps boost foreign investors to begin to come into Nigeria. Okay,
I'm saying the fear because it seems that for this to be sustained, the gains to be sustained this year, a lot of indices have to be maintained, and some the government cannot even control. For example, the price of oil, which is, of course, is still gaining grounds at this time. But then the Niger Delta activities are very important to stabilize the trust foreign investors will have in the country. And there's some little things like maybe the health sector activities. If an epidemic right now breaks out, investors could be afraid. So a lot is riding on the sustenance of the gains made.
You see, what is good about the market is that it seems that the stock market in Nigeria is at the moment being driven positively by the monetary policy, not basically by the physical policies. So, and the monetary policy seems to be on top of their game. Now, what we are seeing presently playing out is because investors, both foreign and local, the most institutional investors, are beginning to reshuffle their portfolio. What happened last year was that we have a lot of foreign investors, institutional investors, and even companies playing the treasury market, the fixed income space. Now, government was the highest beneficiary of that space. Now, government is now looking for a cheaper way to get funds, and government is now going externally to borrow at a cheaper rate through Eurobonds and other instruments. Now, so now investors are beginning to see that the rate you have in fixed income is coming down. So they are beginning to reshuffle their portfolio towards going to the equity market. So that's what is playing out, playing out now. And it played out in every market. If you look for the past 3 years, the treasury market, the fixed income market, precisely, have been doing very well. Rate has been high, 17 to 18%. The foreign investor seem more comfortable to play that space.
Invest, get out.
Invest, get out in the treasury bill is safer, the return is higher, because they are borrowing at about 3 to 4% in their own side. When they use all the calculation indices into it, they could make up to like 10 to 15%. Those that they cannot easily make in their own country. So they come in here. Now they are beginning to see, okay, this rate is going to go down. So where is the next big thing? Is the equity market. Now, that is why all the analysts are saying 2018 will be better, because the fixed income market is going to suffer a little bit lack of patronage. Then again, the United States is trying to raise interest rates. So the return on investment that side, more people want to come into Nigeria because of the kind of return that we are going to make. So that is what is playing out at the moment. Not basically because you're talking about social infrastructure. Remember, we had the Ebola crisis that came up to this nation. And at that time, it did not affect the stock market negatively. What is driving the stock market now is the monetary policy of the present administration. And again, going forward, for the next 3 months, we're going to see stability in the monetary policy. We may even see easing in terms of interest rates. So you could see all that playing in the equity market. Then when you listen to the president's speech on the 1st of January, he's talking about infrastructural development. And most of the companies that are going to benefit from this infrastructural development are listed in the stock exchange. So those companies also are going to make high returns for their shareholders. So investors that knows their owns are beginning to take position in some of these equities.
It's all right. Now, for Nigerians themselves, at some point we used to hear companies selling shares and calling on Nigerians. We don't often hear that as much anymore, but our Nigerians, individual Nigerians, apart from companies and corporate bodies, are they buying shares, which is a good way to invest?
Yes, they are. They are, but those are those with knowledge. They are. But you can't come. Like the last time we had the stock exchange talking to Nigerians about foreign portfolio investors, about 70% to Nigerians, about 30%. That gap was reduced when the market was very down, very low, to almost 48 to 50. But I think that gap has extended of recent also. Now, Nigerians, individual Nigerians do participate in the stock market. They may not be so much, but those that have the knowledge do come to the market, and they are still coming to the market, and more Nigerians are still expected to come to the market. But the only challenge we have with Nigerians is that they don't come to the market when the market is down. They only come to the market when they begin to hear news. Oh, the stock market is doing very well. Oh, share index is 43%. Some equities have gained 1,000%. Some have gained 100 and something. But that is when Nigeria begins to play the space in the market. Now, when there is challenge with the market in terms of negativity in the market, it's not the right time for companies to come to the market. So what you experience for the past 2 years, you see major companies, instead of coming to play the market, they're actually going abroad, doing Euro bonds, doing bonds to beef up their capital, which is also cheaper, but not as cheap as when they do the primary market activities like telling individuals to come and buy stock. But we'll begin to see that play out in 2017, especially with the coming in. We are expecting a major company to come in, especially the telecoms sector, as MTN are planned to be listed in Nigerian Stock Exchange within the first or second quarter of this year. So that is going to boost the market, and we see a lot of primary market activities coming up because investors' confidence is bullish.
Okay. Well, we have to leave you here now. Mukhtar Mohammed, stockbroker, thank you so much for coming on the program.
Always a pleasure being here. Once again, happy New Year.
We should the same.